It's common to hear about budgets during their preparation. However, an important phase of the budgeting process involves analyzing, after the fact, the differences between what was budgeted and what was actually achieved. What does this variance analysis involve? It takes place during what is called the landing phase, that is, the moment or period when we try to reconcile the actual results with the budgeted figures. It will allow us to precisely identify the source of the differences between actual and budgeted figures and to measure the financial impact of each of these differences. Thus, we can calculate variances on expenses, variances on revenue, and variances on margin. For each element, we will calculate sub-variances. The variance on sales volume or production volume will allow us to eliminate the effect of forecasting errors related to the level of activity. And it will make it possible to highlight what is called a flexible budget variance. This flexible budget variance focuses on actual activity. It can then be broken down into two sub-variances that will isolate the two sources of difference between actual and budgeted figures, namely quantities and prices. This way, we can measure the financial impact of each of these sources. Thus, for a company that makes brioche, we will be able to precisely measure the financial consequences for the company of a 20-cent increase in the cost of a kilo of flour. We can also calculate the financial impact of using 100 grams less flour than what was planned in the recipe. The value of this analysis is significant. Indeed, it will make it possible to identify the main sources of decline in results, especially cost overruns or a drop in revenue, and to measure their financial consequences. This will make it easier to take corrective actions by targeting the most significant factors. Moreover, this approach can be adapted not only to compare budgeted data with actual data, but also to analyze the evolution of data between two periods. Of course, the results of such an analysis must be put into context. For example, using more material than planned may be due to purchasing a cheaper material than expected, but of lower quality,